In today's episode, I'd like to focus on the most important data, economic data, and also where we are right now in terms of market standpoint. So let's begin. So recently on the market, some of the optimism been welcomed as SPX has risen upwards on Thursday's evening. Right now, futures are dropping, and the investors are wondering about the future index of US 10-year Treasury yield. When we have a look at 10x chart, we can observe that this head and shoulders pattern that been formed right now is trying to be negated. So if we just set out a neckline, that means right now we are negating this pattern, so the another fight between bulls and bears still should be intact. So kind of a reversal of head and shoulders pattern will have its commence right after this highs of a right shoulders will be overtaken. So right now we don't expect this one to succeed. However, there is still something to watch at. So with 10x to rise once again, we should definitely see another anxiety coming back to markets very soon. However, DXY is still correcting after this very good spot we have found 2 days ago, and it means that rather there is more possibility of DXY to correct further back to hundreds points than to correct upwards further, as I have recently analyzed. So in terms of also what been priced in or not into stock market is that there are still some of the investors, some of the chief investment officers even that claims that those problems we are just going through will persist, and even we are still underestimating the scale of this. So those supply disruptions and also Ukraine conflict that haven't fully been priced in, and also asset allocations that haven't adjusted yet either, are the problems that may still weigh on the recovery of SPX in a full regard. So with this conclusion, we're still observing that there might be just a relief rally to areas being appointed by some of those resistances, or by the trend line that have been led by those hikes back in December and in March. So right now there are some resistances need to be tackled, and by then we still in this close to recession environment with this near 20% drop on S&P 500 index. So I'd like to have an insight in something that also discussed right now, that we are right now in kind of as some of the analysts say, wait and see bias when the market overall is rallying off the bottom as they awaiting what are the another downside catalysts. So there's still kind of merely a relief, but with this recover above those lows of recent March and also February ones, there will be much more optimism getting back to the index. And right now let's have a look quickly at crypto outlook, and right here we have another CU that's going on. CU made by CFTC over Bitcoin futures been introduced by Winklevoss twins. So there is, as we can find, we have entered a kind of a bear market on crypto sectors. So it literally goes in the very similar manner than it was back in the 2080s, 18th cycle, when the bear has opened the market. We have seen kind of a negativity spiral flocking the different crypto media, and right now CFTC is exactly some of the scary story that that is supposed to push some short-term or medium-term investors of the market. So that's just another story that has pushing artificially in some terms artificially price downwards. So with this projection prepared by Christopher Columbus on TradingView, that is a very good analyst, by the way, we should still be on the way of the next another move downwards right in coming months. There is still some space regarding the projections been already here considered, and with this one we should invite the lows been set somewhere around 20 low 20,000, maybe this 21,000 deep been set by MicroStrategy. Liquidation threshold might be achieved in this bear market that may be invited and may occur right in next months. So right here we have another topic of economic calendar. So we are jumping to market mover section, and on a Friday we already had non-farm payrolls. So we had non-farm payrolls, and this gauge has shown us that we have aligned those levels back from March. So it means that non-farm payrolls is as ADP employment change right now decreasing, so it means a kind of a burden, economic burden for Fed. So right now that's also something that may push the inflation higher forward, as the wages may still increase. So we are right now suffering with this sector, and that's something that need to have its probable Fed's intervention. So non-farm payrolls for today. Unemployment rate, however, is still at the same level been seen recently. So we have nearly recovered from this post-pandemic pandemic times, and right now this exactly gauge is looking satisfactory. We still have ISM non-manufacturing PMI index been published today, but this one will be later in time. So that's also something that needs to take attention on. However, on Sunday we have Catering Services PMI from China that also is a very important indicator that we should observe. And in today's Tradelia section, I have a very interesting chart for you that is XLE. XLE is an energy select sector that recently gone through a very spectacular growth. So right now we are on a 4-hour chart right after a very strong sell-off that been met with a news with this oil embargo being introduced on Russia exports. So right now we are just have corrected this wave, but we are in kind of a hesitance on the market. Right now those are two candles on daily chart named spinning tops, and normally when those two happen consecutively, that will be a sign of a possible continuation of the previous candle that recently been here formed. This one candle is also backed by very strong volume, sell-off volume, so it should mean that after a this marking of a price right here, we would observe something like a sell-off to at least 87 points. So so if I'd like to measure this kind of a movement and taking a short position, something like this right here with risk-reward ratio on the level of 5. So right now this situation is changing constantly. However, we are just taking advantage of the particular ineffectiveness of the market. So right now I do find this exact move of recent been found as a possible correction of this trend downwards, and there might be a very interesting spot to take a trade from here. So the short position with a extension to 86.82 and with a stop loss being set at 89.5 is something that might be very interesting for those trades to succeed. So right now area of an entrance is very tight, as I'd like to set it right inside of this box that's been limited by 89.01 and 89.2. If we just get out of this box right after this video been published, this trade shouldn't be treated as a valid one. So as you can find, that's kind of a short-term idea of a trade. I wouldn't keep these positions longer right after this level being achieved. At least I should have a look at what is the price reaction back on those levels, and afterwards I would maybe repeat this step. Alright, so that's everything right here. Thank you very much for watching, and see you back on Monday.